Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 8th of June 2019 and we're providing our gold and silver weekly update for the week ending the 7th of June. Gold rose $35 last week from $1,305 to $1,340, having hit a high of $1,347 and a low of $1,305. In sterling terms, gold finished the week at £1,052. That's up £19. And in euros, it closed at €1,182. That's up €14. Silver rose 44 cents, from $14.58 to $15.02, having hit a high of $15.13 and a low of $14.58. In sterling terms, it closed at £11.79. That's up 25 pence. And in euros, it closed at €13.25. That's up 0.20 euros. The gold to silver ratio fell ever so slightly from 89.5 to 1 to 89.2 to 1. The Dow Jones closed on Friday at 25,983. Just shy of that elusive 26,000 level, up 263 points on the day, and up 1,168 points on the week, and the Nasdaq closed at 7,742, up 126 points on the day and up 289 points on the week, and the S&P 500 also closed up at 2,873. That's up 29 points on the day and up 121 points on the week. Brent crude fell $1.20 from $64.49 to $63.29. And US light crude rose 49 cents from $53.50 to $53.99. To note this, the dollar index stands at 96.55. That's down 1.2 on the week. We ended last week's video with the words, quote, "So next week we can see a continuing in the strengthening of gold and silver prices until the Mexico tariff situation is resolved. We must caution you, however, that once China and Mexico are resolved, and assuming we have seen a significant rise in gold and silver prices beforehand, do not be surprised to see their price fall back." Unquote. Well, the first half has certainly happened, with gold strengthening from the beginning of the week and rising throughout the week, and with the poor non-farm payroll figures guaranteeing the maintenance of its rise. An increase of only 75,000 new jobs for May reported on Friday, against an expectation of 180,000, put downward pressure on US yields, with the US 10-year yield hitting a new two-year low at 2.05%, but closed nearer 2.08%. The jobs figures, coupled with Jerome Powell's comments earlier in the week, is suggesting to analysts and traders that the US may be reducing interest rates sooner rather than later, and therefore rates have fallen in anticipation, and the dollar weakened, especially against the euro, thereby causing gold prices to rise, and silver to some extent in sympathy. Gold yesterday closed up at the highest level for a trading day's close in the whole of 2019, and technical analysts are suggesting support at 1309, the 10-day moving average, and resistance at 1365, which represents April 2018 highs. That said, technicals suggest that gold is overbought and is due a short-term correction, especially as the 10-day moving average crosses above the 50-day moving average, and also the RSI, the Relative Strength Index, reads 77, which is above the overbought level of 70. Now, before we move on to silver, it's worth mentioning that although the non-farm payroll figures were disappointing, nevertheless, this still represents 104 straight months of gains. plus the unemployment rate remains at a 50-year low of 3.6%, and average hourly earnings year over year in May were up 3.1%, only 0.1% lower than expectations. And not forgetting, of course, the labour force participation rate was unchanged at 62.8%. What tended, though, not to hit the headlines so much, but is worthy of note, is that March's employment figures, or job figures, were revised lower, from 189,000 to 153,000. And April's was also revised lower, from 263,000 to 224,000, cumulatively representing a total reduction of some 75,000 jobs. Now, this certainly surprised traders in that it is strong evidence to suggest that the economy is not only slowing down, but could potentially be heading into a recession. Though most admit that if that is the case, it is looking more towards 12 months' time rather than now. However, markets are, as a result, pricing in a summer interest rate reduction, likely in July, followed by another cut in September or October, followed by a third in early 2020. Our view is that this decision has not yet been made, and there is a danger that markets may run ahead of themselves. Whilst the growth in jobs are declining, they are still growing. And it was announced late Friday that the planned Mexican trade tariffs will not now go ahead. A greater stumbling block is, of course, China, with tensions increasing rather than decreasing between these two global economic superpowers. Our analysis still suggests only one rate cut this year, but much depends upon how well President Trump can negotiate a number of outstanding trade deals over the next couple of months. It's very much in his hands, but with President Xi of China calling Russia his best friend, will hardly help matters with any US negotiations. Now let's cover silver. We're always one of the first to mention silver prices going down, or warning about it. But likewise, when we have seen a shift in sentiment, we have also called its rise. There is now an interesting pattern being created, the analysis of which we've not fully completed, but silver has been the victim to some extent of falling industrial demand, and traders who trade paper silver have not been interested in it either, because of a most plausible argument that's difficult to countermand, that silver's demand will weaken further if the world's economy is moving towards recession. Now that said, silver is also trading close to a gold-to-silver ratio of 90-1. Now that on its own doesn't concern us. We've stated even when it was in the 70s that we expected it to rise well into the 80s. However, chart patterns are suggesting that there could be a breakthrough, and based on historical trends, silver could actually attempt to rise that $16 level again quite soon. That said, we still have to be mindful that the issues which pushed silver down from $16 near the start of the year to $14 are still present, save that interest rate expectations have changed, and therefore a little dollar weakness is expected, at least short term. Now, the prospect for lower interest rates, whether real or imagined, have also reignited stock markets, and they too could become the beneficiary of hot money, at least in the very short term. And this could be at the expense of gold and silver. So, there is quite a balancing act for investors and economists to consider. On the one hand, you have a deteriorating economic trade system, which will mean industrial demand for silver will fall, leading to lower rates to boost the economy, which will help equity markets, perhaps at the expense of silver and gold. And compared this with silver prices rising in unison with gold, as interest in it as a monetary metal increases, while its interest as an industrial metal decreases. And as interest rates fall, the dollar weakens against other currencies, thereby causing gold and silver prices to rise. And this is an assessment that has to be made without a myriad of other factors also to be taken into account. So you see, it's not a perfect science. Add into the mix Trump's tweets and almost anything can happen. Seriously though, as we have mentioned in previous videos, we are more concerned about potential escalating military conflict and action with Iran, plus skirmishes with North Korea and China. And let's not forget about the secret, yet quasi-public plan the United States has for regime change in Venezuela. So, what economic data have we being announced next week? Well, on Tuesday we have the Producer Price Index for May. Wednesday, the Consumer Price Index and Core CPI for May, quite important. Thursday, Import Price Index. And Friday, another important day with retail sales and industrial production for May. And the Consumer Sentiment Index for June. So early next week, we may indeed see a pullback, certainly of gold prices initially, and especially as the Mexican tariff threat has been removed. That said, it is quite possible that both gold and silver may only use that as a pause before higher prices are on the horizon. Now, we are not rushing out to buy as yet, but even if gold does hit $1,400 and silver $16, we must all be mindful that we've been here before, expecting further escalated rising in prices only to be disappointed. Now, we are keeping our powder dry for the moment to see how traders react on Monday and Tuesday. But as we said last week, with all of the geopolitical as well as economic concerns, it is most surprising that gold and silver are not already higher than they are. Should be at least 10 to 20% higher, which at least suggests for now where investors' minds are focused, rightly or wrongly. It hasn't been on gold and silver. Now, meanwhile, until then, we hope and wish you an enjoyable weekend and a prosperous week ahead. And a brief reminder to all Silver Inner Sanctum members, we have our monthly webinar this evening, where we shall discuss these matters further. Plus, we'll cover President Trump's visit to the United Kingdom, which should prove interesting. Both Greg and Jono Marcus will be in attendance. Finally, and in case you were not aware, we have launched a new live communications channel utilizing the Discord platform. And if you are an Inner Sanctum member, regardless of whether you're a free member or paying member, you should have received a link in your email account allowing you to access this channel. If you're not a member, then please go to our website at illuminatisilver.com and sign up, and we shall send you an email link within 48 hours. We've also placed links to the 2 YouTube videos we've produced on our Discord channel for you to peruse if you haven't already done so. So we certainly hope to either see you at the webinar or at some stage on our Discord comms channel. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.